Ladies and gentlemen, thank you for being here today, for diving into the brave new world of digital assets, and in particular, the story of Bitcoin. When you look at Bitcoin, you're looking at more than just a price chart. You're looking at a symbol of transformative friction in the global financial system, of innovation and also of risk. Over recent days, Bitcoin fell below what many chartists and analysts regarded as a key support level, a line in the sand of investor psychology and technical structure. CoinDesk. That breakdown is not just about the number. The fact that Bitcoin slid below around $106,000 during Asian hours, dipping beneath a level that had held multiple times in recent weeks. CoinDesk. What does that mean? It means the market is rethinking its assumptions. It means some of the optimism that fueled the breakout is now being tested. It means support once taken for granted is now in doubt. And that, my friends, is a pivotal moment in any asset story. The analysts at 10x Research and others point to a possible slide toward the $100,000 to $101,000 zone, and if that fails, even deeper toward perhaps $94,000 or lower to $85,000, what one called the maximum pain zone. CoinDesk. Now, why is this happening? A few themes stand out. First, there has been a liquidity shock and a recollection of risk across crypto markets. For example, October's rollover of leveraged positions, broader liquidations in the space, has left sentiment fragile. Bloomberg. Second, the macro backdrop is getting more complicated. Expectations of rate cuts from the Federal Reserve have diminished. The US dollar is showing signs of strength. Risk assets are under pressure. Bitcoin is not immune. CoinDesk. Third, there are technical triggers. The so-called Magnificent Seven tech stocks are flashing signs of exuberance. Put-call skew inversions, credit default swap moves, which historically have been associated with tops or consolidations in risk markets. CoinDesk. So if we zoom out a bit, what are the lessons here? 1. When you invest in Bitcoin, you invest in an asset that is reflexive, meaning investor expectations influence price, which in turn influences investor expectations. Support levels that hold for a long time can become weak if too many believe they'll hold. 2. You invest in Bitcoin with a recognition of two-way risk. When things are trending upwards and the narrative is one of unstoppable momentum, support levels are easily held. But when sentiment shifts, momentum can flip, and weak hands may exit. 3. Bitcoin remains tethered not just to crypto-specific developments but to the broader risk environment. Interest rates, dollar strength, global macro sentiment, regulatory developments. It is a hybrid asset, part technological innovation, part speculative bet, part risk-on instrument. Let's talk about opportunity, because Bitcoin still has one. The narrative of digital scarcity, that Bitcoin's 21 million supply cap, that its decentralized ledger make it a unique store of value, continues to resonate with many long-term believers. The narrative of adoption, institutions adding Bitcoin, financial infrastructure expanding, governments looking at digital assets and crypto custody, continues to build. But the execution risk is real. For those who believe Bitcoin must break out to new highs, the question is, will institutional flows come into play strongly? Will retail speculation pivot back in? Will the asset prove resilient in a tougher macro environment? And for those concerned about risk, what if Bitcoin fails to hold that support zone? What if the downtrend line becomes the dominant narrative? What if leverage and derivatives amplify the move lower? These are not hypothetical. Analysts are pointing to precisely those scenarios. Now for your audience, your viewers who follow business and finance, you can frame this story as Bitcoin stands at a crossroads. On one side, the bullish case, new highs, institutional adoption, digital asset revolution. On the other, support broken, macro headwinds, leveraged unwind. You might emphasize that this is no longer a pure, by the dip asset in the same way it might have been when the narrative was simpler. The markets are more complex. The psychology of buyers and sellers has evolved. 4 practical watch points. Number 1. How will Bitcoin behave around the $100,000 to $101,000 area? If that level holds, then the bullish case remains intact. If it fails, deeper correction becomes on the table. Number 2. Monitor derivatives and leverage. If forced liquidations begin again, the downside can magnify quickly. The crypto market is notorious for sharp moves when positions become crowded. Number 3. Watch macro signals. If the dollar firm ups, interest rates stay high, risk assets retreat, then Bitcoin is exposed. Conversely, if inflation moderates, rate cuts come back into view, risk-on returns, then Bitcoin could rally. Also important, regulatory and structural developments matter. Custody, exchange infrastructure, institutional flow channels. If these improve, the adoption narrative strengthens. If there are cracks, hacks, regulatory clampdowns, exchange failures, the opposite. From a video angle, you might open with the headline, Bitcoin loses its cushion, what comes next? And then walk through the data, the support levels, the macro context, the narratives. That invites your viewers to think, not just react. You might highlight the paradox. Bitcoin has made strong gains this year in many markets, yet it's vulnerable now because the support that underpinned those gains is shaky. That kind of nuance builds credibility. You might also caution, if you're investing in Bitcoin, you must be comfortable with volatility, you must manage position sizing, and you must have a thesis for why you hold it, not just because it keeps going up. In summary, Bitcoin is at a litmus test moment. The price action below key support suggests the trend is up for review. But the long-term story of digital assets remains alive. The key will be how Bitcoin navigates the next few weeks, whether this is a temporary stumble, a consolidation, or the beginning of something larger. To your audience, watch whether Bitcoin can hold or reclaim support. Watch whether macro tailwinds return. And remind them that in markets every support can break, and every breakout can fade. Being prepared, informed and patient often beats being impulsive. Thank you for listening and for helping your viewers understand where Bitcoin stands today. Not with hype, but with context, risk, and opportunity all on the table. I look forward to our next update together, as we watch whether Bitcoin's next move will be a rebound, a reset, or something new altogether.